Hello and welcome to the preview for the June 5th ECB rate decision. Now the rate decision is one of the closely followed in many months as the overwhelming majority of analysts see the European Central Bank taking action to stem the disinflationary pressure in the euro area that's been observed not just in the past month but in fact over the past 6 months or so. In terms of the actual rate decision itself, of course we saw that CPI estimate coming in at just 0.5%, and the central bank are expected to take action on all three of their major rates in order to bring it up from that 0.5% level that we saw reported earlier this week. So the overwhelming majority of analysts see at least a 10 basis point cut to the major rates, with some seeing the main refi rate cut to as low as 0.1%. The marginal lending also brought down further, but the focus will really be on that deposit rate as it could be moved into negative territory, with some analysts seeing this being cut as much as 15 basis points down to minus 0.15%. So this would be an unprecedented move by the ECB, never been done before in their history. And this actual topic was pretty taboo just a couple of months ago, so it would show that the ECB are very, very committed to bringing some inflation and injecting some liquidity into the euro area. Now, one of the targeted areas of the economy that this is really focusing on is the small to medium-sized enterprises, who particularly in southern Europe continue to run into troubles in really securing funding for their projects, particularly in the likes of Spain, Italy, Greece and Cyprus. So another way that this could be alleviated, which some analysts see being announced at the press conference, is another form of LTRO. So a couple of years ago we saw €1 trillion being lent out for a period of 3 years, and press reports as recent as this weekend suggested that this could be replicated but on a 4-year maturity, and these would be lent out only on the basis that they'll be used responsibly to bring down these borrowing costs for the small companies over in southern Europe. So that could be very positive for the economy itself. But in terms of the markets, if you do recall, at the last rate decision the euro-dollar rate actually tested 140 to the upside, and the ECB President Mario Draghi does risk this being brought back into focus if he disappoints the markets. And another buzzword that the markets have been focused on recently is of course QE. Now the ECB cannot conduct quantitative easing to the same extent that the likes of the Bank of England, the Bank of Japan and the Federal Reserve have done so in their recent history. Now this is due to it being tantamount to monetary financing, which of course is illegal due to EU treaties, but Draghi could heavily signal that they are willing to do this if the appropriate legislation is altered by severely downgrading their 2014, 15 and 16 inflation forecasts, heavily signalling this is another tool left in the ECB's toolbox to combat any further disinflationary pressure down the line. So 12:45 we'll see the rate decision itself, with Draghi and his board stepping up to the plate at 1:30 to present any further policy tools in what's likely to be a very eventful and closely watched press conference itself. Of course we'll bring you all those releases as soon as it hit the wires, as well as any other relevant commentary to your trading. In the meantime, that's all from me. Good luck with the release.